So now let's turn to the role of private equity and venture capital in the campaign to decarbonize the economy. We'll be hearing the unique perspective of Bobby Pauly, managing partner of Mumbai-based One Planet Partners. As the world's third largest and fastest growing carbon emitter, India is key to meeting global carbon emissions goals. And while the Indian government has made significant commitments to support the country's climate transition, there's a notable gap in available capital to fund the pivot to decarbonized prosperity. Bobby's going to share insights about bridging in that capital gap and creating a more robust ecosystem for climate investment. Bobby Pauly, welcome to the Wall Street Green digital stage. Please share the story.
Thanks, Mitch. Thank you very much in having me on this panel. Maybe I can just share my screen and walk you through about 6 or 7 pages, and then take questions at the other end of that. If you can just see my screen, please give me a shout, and then I can get started.
We see it.
Fantastic. Thank you. So what I'll do over the course of the next 10 minutes is try and give you a sense of where is the climate transition, or what is the climate transition requirement in a country like India, why it is important to India and why it's important to the world. Secondly, I do want to give you a sense of where does capital come into the country behind climate transition and climate technologies, where that has been concentrated on, what is the gap, and therefore what is the challenge, and on the flip side, what is the opportunity in addressing that challenge. Maybe I can just focus on a couple of background charts to get the discussion going. I think most of you might have seen this chart. This is the carbon footprint of various geographies around the world. What the chart on the left shows you, the left footprint is the carbon footprint by various countries. As you can see, the United States, China, and India are the 3 largest carbon emitters as far as countries are concerned. But if you flip that and see what is the per capita emission, that is per individual, India is the small dot. So every Indian on an average, emits a significant fraction of the amount of carbon emissions somebody in Singapore or in Japan or in the Middle East or in Europe would emit. So despite that very minuscule emission per individual, India is still a very large emitter of greenhouse gases, simply because India has 1.4 billion people. But the irony is India is just beginning to grow. If you see the next chart, I'm flipping to this shows the last 175-year trajectory of carbon emissions of various geographies. What you will find in the mid 20th century is when Europe and America took off on its per capita emissions, and more recently in the last 25 to 30 years, you see that China has taken off almost 3x. By various estimates, India is about 15 years behind China. India is today the fifth largest economy in the world, and quickly moving into being the third in the next 3 years. If India continues to grow at its current pace, India will be the 3rd largest economy. And as Indians' per capita income increases, their energy demands will increase. And what you can see on the chart here is India is at the 1/3 of where China is currently, with a similar population as China today. As India emerges from poverty, or more Indians come out of poverty, their energy requirements will increase. And if India were to traverse the same path as about 1,800 years ago, or what China did in the last 25 years, make no mistake, neither will India nor will the world meet its climate targets. So India curtailing its emissions is very important for the whole world to invest behind, because the transition of climate action in the world is very closely embedded with how India tackles that challenge. What is also important is from an Indian perspective, and I'm sorry about if you're not able to see the numbers on this chart. What this chart show both on the left and the right is the impact of loss and damage from climate calamities on the geographies, on various countries. India has always featured in the top 10 countries which has had the most impact of loss and damage from climate. What you see on the right of the chart, and you can see my pointer here, are India is right in the middle of the epicenter of the most vulnerable regions geographically on the adverse impact of climate change. So India, for its own good, needs to invest behind climate transition. And for the world, it's very important that India traverses that path in a manner that it does not flout our global ambitions to hit net zero. Yeah. The Indian government has responded, I would think, in form and in substance. I think, and this is from the COP26 when India made its NDCs public. They're fairly ambitious targets that India has taken: 500 gigawatts of non-fossil renewable energy. 50% of the country's energy requirements will come from renewable energy by as quickly as 2030. And there is a significant amount of focus on driving that transition in the overall sources and means of use of energy going forward. The total carbon emissions by reducing by 1 billion tons by 2030, to bring down our density by as much as 45% from the baseline effect by 2030, and of course achieve net zero by 2070. For a country with 2,500, 2,700 per capita GDP, with 1.4 billion people, this is a fairly bold and ambitious target that the government has taken. What it also means that it requires a truckload of money to actually achieve these targets. But what you will see in the next chart is what India needs on a per annum basis is about $170 billion per year. So kind of $1 trillion in the next 6 to 7 years, right? In the next 6 years or so. What is currently happening is about 44 billion. And if you're, that's across all asset classes, equity, debt, different structured finance and the like. But if you think in terms of pure risk capital, which is probably where it's needed the most in terms of driving evangelization of a movement of technologies that need to come to fruition, less than 1 billion has been invested in the last 2 to 3 years. So what is mean, on an average, I think we're probably on a trajectory of about $1 billion a year. So against a $170 billion requirement, you're talking of about 44 billion, a gap of $125 billion annually in meeting the climate challenge. And that's a big challenge to be solved for. Corollary, we believe that it is also a big opportunity, because by virtue of what's happening in both the government's targets and regulations that follow in suite, there is a ton of businesses which stand to actually benefit by being able to ride on the clean energy trajectory, whether it's electric vehicles, sustainable mobility, renewable energy. I can go on for the long list of sectors, but we do see that that's not just a challenge, but also a huge opportunity. But how is that opportunity being addressed? What you will find on this chart is that on the chart is a chart from McKinsey. It says India receives less than 2% of global investment behind climate tech. So for a country which is 1/6 or 1/5 of the world's population, closing to be a fifth of the world's population, we are getting 2% of climate tech investment. Clearly not enough. If we look at what constitutes that investment again, I'm sorry, these charts are a little small to see if you're on a mobile phone or on a small screen. But the substances of the 2% that India receives, almost all of it, about 83%, is in this light blue trajectory, which is seed stage investments. So 83% over the last 6 or 7 years of the money that has gone into climate tech in India has been in seed stage. Only 17% has progressed into a stage, Series A, Series B, and the like, which means one of two things. One is that these companies have been enormously successful, that post-seed stage they did not require capital, which is certainly not the case. But it's true, equally true, which is probably that the mid-market, Series A, Series B, early growth, expansion capital has been lacking as far as this segment of climate tech and related investments is concerned. So India has really starved for that kind of capital, starting from early going into the larger buyout trajectory. If we look at the managers who are managing these monies, and these are names of managers who are not necessarily climate focused funds, a few of them are, a couple of them, but these are funds which have done, let's say, 3 transactions in the climate area in the last 3 or 4 years. 2020. And what you will find are a few interesting insights. Majority of these players are about $100 million in size, no more, which means that from a capital that they are managing, including AUM, the amount of fee they generate to create the infrastructure, intellectual and infrastructural, are both pretty modest. Most of them are subpar in size to receive capital from large pools of institutional capital. What I mean is, if I have a $120 million fund, any large LP or an institutional investor, whether it's a university endowment, it's a pension fund, it's a sovereign institution, or even a development bank, will find it difficult to put capital to work, because if you want to invest $20 million or $30 million, you're 25% of the fund size, and that's not something most people want to be. Most managers lack, I would think, track record in venture capital or private equity and climate. So understanding climate and venture capital is pretty much lacking. So the pool of informed managers is pretty shallow. It also shows that there is the opportunity set in climate tech, because of the lack of development of deep research and university funding for research in the whole climate tech area is quite shallow. So we do see that there is a lack of opportunities also. And therefore the best deals tend to get a bum price, because it's a very more managers chasing the very few very good deals. What it goes to show is that we do think that there is room for an informed manager to play in what we call as early growth or the middle market, which we think is pretty much lacking, which is where we think the largest opportunity, bang for the buck, from a private equity stroke venture capital space resides. If you look at from a fundamental perspective, India's fundamentals from an economic standpoint are very robust. You're looking at a 10% nominal GDP growth, which is real growth plus inflation over the next 6 years or so. This is the baseline growth. This factors in about 6% real GDP growth and 4% inflation, which we think is very real and is very achievable with very minimal intervention in terms of, or let's say modest intervention in terms of further reform. I think this can be boosted up with significant reform. What you're also seeing is a population whose per capita income could also double in the next 5 to 6 years. So this is a big opportunity from a fundamental standpoint. There are about 4 large triggers, as we see from our perspective, our vantage point of One Planet Partners, we see is driving this growth. One is the demographic dividend that India has. India is a very young country. The median age is sub 30 years of age, is about 28, 29, and is supposed to remain that way for the next 17 years, going up to 2041. So we do see that India has a long runway of adding many more people into the working class, and therefore disproportionate increase in per capita incomes, and therefore significantly big risk in terms of higher draw on energy and on greenhouse gas emissions. We do see that the digitalization play in India has had significant impact on how many sectors have responded, whether it's financial services, the internet commerce. We kind of leapfrog by many generations the Europe and North America, or even the Far East, Japan and Singapore, for instance, in terms of acceptance of internet technologies, payment gateways, and the like. The geopolitical situation again is adding a big opportunity. The China plus one strategy is now beginning to show in many businesses moving shores to India or expanding operations in India, which is very real. And of course, the whole decarbonization and climate story, whether it's in the areas of clean energy, areas of reducing carbon intensity, hard to abate sectors, the whole infrastructure play, metro cities and things like that, metro railways and all of that is opening up significant opportunities. So from a macro perspective, India has significant opportunity. We as One Planet Partners are choosing to play in the middle market, where we think the most opportunity lies, and we are investing behind companies which can ride on the tailwinds of climate change, which directly address climate change, and in many spaces where we think there is an opportunity for re-rating of companies from gray to green. That's been the focus of where we operate. But that's not the end of the story. We are actually at the tip of the iceberg. What this chart shows, and this is the final chart that I will state, is that in terms of opportunity set, and this is on 3 axes, whether you think about the sources of capital between philanthropy going all the way to private capital return seeking, or you take the type of capital, whether it's blended finance or grants on the one end, or debt and equity on the other end, which is the risk capital, the type of risk, or the uses of capital, there is significant opportunity. We are just starting in terms of transition finance and climate tech. I think there is a lot of investment that could happen in green infrastructure, new energy enablers, new finance markets, and the like. And what you need is informed managers who have an understanding of both the asset class and as well as in their some credibility with investors and an understanding of climate science. And if we are able to marry the two, and that's not a trivial challenge, if we are able to marry the two, I think there is an enormous opportunity for global pools of capital to play in India. In substance, it's something that India needs for its own sake, but it also means that it is very important for the world to support it for its own sake, because I think India's climate transition is very important for the world, as I outlined earlier, and therefore everybody has a stake in trying to address it. I'll stop there. Happy to take questions, Mitch.
We have just a couple of moments, but I wanted to, obviously, innovation is driven by a mature business services ecosystem in addition to capital. How is India making progress towards bringing the right set of business support capabilities to these climate tech companies?
So in terms of availability of capital, that's not too much that has happened. What we do have is the government extending financial benefits on the borrowing side for mid-market companies to actually access. But I think the market access through several schemes of the government, driven by industry bodies like the FICCI, and that is the Federation of Indian Chamber of Commerce and Industry, the Confederation of Indian Industry, a lot of such, the Startup India, which is a large organization which Indian government is also championing, is helping many of these companies attract new customers or probably access different pools of financing. Those are structured interventions that the government continues to take, which can help mid-market companies write this story quite well.
But the other thing that I wanted to ask about is India is clearly early on in the rise of its capability to implement innovation quickly. And Bain has pointed out it generally takes a little longer and there's a little lower return on investment for Indian startups compared to those in the US and EU. But can you kind of paint a picture of what you expect the types of returns will look like 5 and 10 years from now compared to today?
I think I beg to differ, because I think on the ground in terms of venture capital returns because there's not too much of a history of climate focused venture returns. So therefore, I would beg to differ. The kind of transactions we are seeing in the deal flow we are looking at, I would think that we're looking at in a rupee terms of 25 to 30% gross IRR kind of investments, and we're seeing a bunch of them that are happening. If you have the knowledge and understanding of climate science and the ability to actually influence outcomes of investments, we do think that kind of a return is possible. What that translates to in a dollar term, because we have 2 to 3% forex drag as well as fee and carry drag coming into that, but net of that, you're talking about 20% dollar returns to 2.5 times net returns, and that's happening, I would think, in the top, or let's say the top 1/3 of transactions in this space.
That's encouraging to hear, both that the returns are starting to really be competitive and that there is the activity on the part of the government and everybody that you've described in India. Thank you, Bobby, for sharing this story. Folks, to learn more about One Planet Partners and the Indian startup environment, visit oneplanetpartners.com. That's all one word, no spaces, no dashes, oneplanetpartners.com. Now we're going to take a quick commercial break, and Wall Street Green Digital will return to discuss how data science improve the profitability of solar farms with Vishnu Ram of Precinto, a global leader in energy project optimization software. We'll be right back.
Thank you.